Hey all, good morning and welcome to ShareTrek. This is Raj here. It's the 16th of September 2022. Today is a Friday. It's a quadruple witching day. We'll talk more about that later. It seems to be a scary market today. Let us see how much it can scare us. Let's get started. Welcome back, friends. My intention is not to make you feel depressed or scared, but at the same time, I don't want to give you false hope. So I think that the dark clouds are gathering over the market, and one of the news that really started off my day today was that FedEx withdrew its full-year guidance and announced significant cost-cutting measures following what it called softness in global volume shipments. The company will close 90 offices, 5 corporate locations, and defer hiring. First quarter revenue and earnings per share fell short of Wall Street expectation. How bad was it? Well, earnings per share came in at $3.44 against the expectation of $5.14. That's where it was the biggest hit. When it came to revenue, it was not that bad. The revenue came in at $23.2 billion versus $23.59 billion, but the EPS is significantly down. The company cited specific weakness in Asia as well as challenges to service in Europe for its underperformance in the first quarter. This is to be expected, in my opinion, because as the US dollar gets stronger with every interest rate hike and makes import expensive for most countries, especially because oil is sold in US dollars, so inflation is exported to other countries. The end game would be a drop in US exports. Finally, we will slip into recession. That's what I think is likely to happen. On top of this, we have quadruple witching with all options expiring across indices and is known to cause volatility, and that's happening today. Quadruple witching usually occurs on the third Friday of March, June, September, and December during the last hour of the trading day. So whatever happens during the day, the last hour of the trading day is going to be crucial. Now, talking about more structural things, let us look at the interest rates. Interest rates have to be above inflation rate to moderate the inflation. Under any scenario, it doesn't seem likely that we will ramp up to 9% over the next 6 months. I don't think the market can take it. I don't think the people would take it. It would cause a lot of problems. However, we have quantitative tightening. Quantitative tightening can be accelerated to lend a helping hand along with strong USD, making the imports cheaper. So that's how we will be able to come out of this. But with a strong USD making imports cheaper, the converse is that it's going to make exports more expensive. And when exports become more expensive in this kind of a market, the other countries which are importing from US will import less, and therefore production capacities will have to be reduced. People have to be laid off, and that's how we slide into a recession. This journey will inevitably lead to job losses as exports fall and we slide into a recession. The strong USD exports inflation and imports deflation, in my opinion. And now look at gold. I was looking at the gold charts. It's languishing. At this point of time, I thought gold should be really, really strong, but it's testing some of its lower supports at this point of time. So I don't know what to make of it. But on the positive side, not everything is too bad. Markets move in cycles. We are on the down cycle, obviously. As per old standards, we are already in recession with 2 negative growth quarters. Whichever way we define a recession, our portfolio sure is not showing greens yet. Recessions have lasted for a duration of between 2 to 12 or 18 months on an average, with the average spanning about 10 months. So that's the kind of stats I have seen about recession. So at the most, it can go on for 18 months, at the least for 2 months, and on an average for 10 months. So that's what I would keep in mind. And that makes me feel less worried because I can hold on for 10 months to 18 months to see my portfolio revert back and give me some profits. And as a retiree, this does make me worry because if I had not kept some money aside for my day-to-day expenses, and if my wife wasn't working, I would have had to dip into my stocks at this point of time, and I would have had to sell more stocks to get the same amount of money that I need right now. As I would have, if the market was at its peak, I would have had to sell much less stocks to get the same amount of money. So that's the way I'm looking at it. At this point of time, I'm feeling okay, but I don't know about you. Each of you have to look at your own portfolio. This is where the financial discipline of having at least 6 months of living expenses saved away somewhere, which is in a liquid form, like in a fixed deposit or something, comes in handy. But even that 6 months would not have helped us if the recession is going to last for 18 months. So overall, I think at this point of time, I'm a person who looks at glass half full. So I'm personally focused on Bluebird Bio. Today, we should hear about Bluebird Bio's Eli cell being approved by FDA. Anything short of approval can tank this stock. That's my personal opinion. So with that said, I would now like to look at indices. Today, I'm not planning to look at the genomic stocks or individual stocks or the index movers. I'm just going to focus on the indices because it doesn't make much sense. Nobody knows what the hell is going to happen today with quadruple witching. And I think I would save time if we just focus on a few of the indices and end this session. So with that said, let's go to the TradingView platform. Well, friends, here we are in the TradingView platform. I'm at the Nasdaq futures. And as you can see, we are in a bear channel on Nasdaq, and we have fallen below the support line, which we had here yesterday at 12,168.25. Pre-market, we are down 0.99%. I'm going to mark this a line of support as a line of resistance because we have fallen below it. And I'm going to extend this bear channel a little more so that you can see the full length. How low can it fall? So at the very first level, I think I would put a line of support somewhere out here. This is a very rough line of support that I'm drawing out here, and it's going to be adjusted a little bit. Yeah, somewhere out here, which I would say it's 11,597.00. Our MACD is bearish, and the momentum is also below average. So Nasdaq futures are not looking good. Nasdaq futures are on a bear channel. And if you look at the indicators, US oil is up 0.75%. I'm going to go to QQQ. If you look at QQQ, we are already in a bear channel. We had been in the bear channel all the way from, I would definitely say that all the way from somewhere around, we have been on 22nd of November onwards, we have been on bear channel, and we have not gone above the rate at which we were the max index level we had on that day. And since then, we have been falling within this bear channel with a brief breakout from there, but we are now firmly back inside it. Our next support is going to be at 286.35. If I look at the MACD, it is bearish. Momentum is also below average. And of course, as I mentioned, today we have quadruple witching. So the last hour can either give a spike in prices if people manipulate the market in order to take advantage of their puts. I don't know how those things are done, but they are known to happen. So the last 1 hour is going to be very tricky. And the technicals definitely point to a bearish market. If you look at S&P 500, you would see that we are still in a bearish channel. And I'm going to draw this line further down. And yesterday, we broke down below this minor line of support. I'm going to make that into a line of resistance. And then we bounced off our support, which was at 388.74. Today, pre-market, we are at 385.48. So we are already below that, and this is where we are. And this is the line. This is the point where we are. I'm just going to draw a line out here, a small line, just to show you where we are. So this is where the market is right now, pre-market. This is where the prices are pre-market. So we are already below the line of support up here. Therefore, what I'm going to do is I'm going to mark this support as a resistance at 388.74. So there you go. Now our next stop is going to be at 376.38. And before that, I think I'll draw a minor line of support out here somewhere in this range. This is potentially another line of support that we may have, which is at 381.55. That's a very rough estimate of a support. Our MACD is bearish. Momentum is also below average, not looking great. Pre-market, we are down 1.21%. So if we were to look at Russell Index, it's down minus 0.78%. And right now, the market price is out here. It's at this orange line out here, which is sitting at 180.22. It's obviously below our previous resistance. And our next level of support is going to be out here in somewhere around 176.82. That's the next level of support. MACD is bearish. Momentum is also below average. So it's not looking great for Russell Index either. And if you look at Dow Jones Industrial Average, it's down minus 0.98%. Pre-market, we have fallen below 310.69. So I'm going to mark 310.69 as a resistance. Right now we are at 307.33, and if I was to look at where that seems to be, it's out here. This is the point where you will find the Dow Jones Industrial Average. This is 307.33. So I think what I would do is I'll continue to expand this line further, the line of support for the bear channel, and our next support is going to be at 310.49. And if I was to look at interim support, we are already at the interim support, which is at 307.33. It's a minor support out there, but I don't think we're going to go above that because momentum is also below average and MACD is bearish. If you look at VIX, VIX is already above our previous line of resistance at 27.20, so I'm going to mark it as a line of support. And MACD is bullish. Momentum has got plenty of runway to become overbought, and it's already above average. So VIX is looking pretty strong. It's not good for us. VIX is up 4.15% from yesterday. Not looking good, and this is the bull channel on which the VIX is still running. So it's a bad news for the stock market today. If you look at US dollar is continuing to go up. It's up to 13,249 or 13,250 as we speak. Pre-market it's gone up 0.10%. MACD is bullish. Momentum is above average with RSI not being overbought. There's plenty of runway before it gets overbought. So everything indicates that things are looking bad for the market. And of course, I said I won't look at index movers, but I have just a bit of morbid curiosity. If you look at Amazon is down 2.44 pre-market. Google is down 0.76 pre-market. Apple is down 0.93 pre-market. Microsoft is down 0.86 pre-market. So they are all down. And if I was to look at Genomics, I'm just going to sort this out and get the winners from yesterday and just quickly look through them. Editas is still looking positive pre-market. PSEB is down pre-market. Intelia is up pre-market. Beam has got no trades pre-market. CRISPR is down pre-market. Verve no trades pre-market. Illumina is down pre-market. IMTX no trades pre-market. Caribou no trades pre-market. SQZ no trades pre-market. DNA is down minus 3.19% pre-market. And ARCG has got no trades pre-market. IDNA, the ETF, has got no trades pre-market. And if I was to look at Bluebird is down minus 0.42% pre-market. Let me see if we have ELISL news. We don't have the news from FDA as yet. But I think if ELISL doesn't get approved, FDA is going to, by the FDA, then Bluebird is definitely going to fall because overall market is weak. Zynteglo needs to be commercialized, but Bluebird doesn't have as much funds in its balance sheet, and it's losing top executive. So I think the market is holding on for FDA approval of ELISL. If that doesn't happen, expect Bluebird to fall today. That said, Teladoc has got a drop of minus 3.10% pre-market. Novartis is up 0.84 pre-market. And if I was to look at Invitae is down 2.87% pre-market. Allogen is down 2.64% pre-market. So overall, I would say that it's a write-off day. It's going to be exciting from an academic sense when we look at the quadruple witching and what it does in the last hour of the market. But whatever happens, Monday is likely to be bleak as well, looking at it from here at this point of time. My friends, I don't want to depress you, but with that, I would like to bring this video to an end. I don't have much more to add out here. Like you, I'm also going to be watching the market. I don't claim to know everything, but whatever I see here right now makes me feel absolutely bearish. Let us see if the last 1 hour gives an opportunity to make some profits, if there is a spike when people try to cover their shorts. So I think that conclusively brings me to an end of this video. I've got nothing more to say. If you like this video, despite all the bad message I'm giving you, please press a like out there. It helps the channel. And if you're not yet subscribed, please subscribe and help us grow this channel. And I'd like to thank the 650th subscriber who subscribed early this morning. Thanks for taking us across to 650. Our target is 1,000 subscribers. So any of you who have not subscribed but watch our videos, please subscribe and help us grow this channel. Thanks and have a good day. Bye for now.